So yeah, what I'm going to talk to you today about is our Palmer VMS project located in southeast Alaska. And as Gwen said, we've been able to be very active over the past few years where a lot of folks are idle. And that's allowed us to advance our core asset in a very meaningful way and hopefully tee us up pretty well for the pending bull base metal market. You know, that's included a doubling of our resource. We're now sitting at 8 million tons of 1.4% copper, 5.25% zinc, and precious metals credits. It sits within it's a district scale property with quite obvious multi-deposit potential. We're in a politically stable, mine-friendly jurisdiction. Great location, great access, and exceptional partnership. Well, that partnership is with Dowa Metals and Mining. They're an integrated metals company who operate the largest zinc smelter in Japan. They also have an interest in operating mines in North America. And they're currently earning a 49% interest in the project by spending $22 million over 4 years. They've indicated their intent to complete that earn-in at the end of this year, at which point we'll form a joint venture where Constantine will maintain a 51% majority interest and be operator. Over the course of this deal, there's been cash payments and operator fees totaling north of $2 million that's allowed us to keep our head above water, and we haven't financed since 2012. We had 115 million shares outstanding in May of 2012, and we have 150 million shares outstanding in May of 2016. One other, I guess, aspect of the deal is Dowa, they are a smelting company, so they have offtake rights. I think it's important to clarify that those are at arm's length commercial terms, and that means we get full exposure to a rising zinc price. As we're looking forward here to, I guess, post earn-in, one of the things I think is worth talking about is the optionality we have. It is our objective, Constantine's objective, to maintain a 51% interest. We think there's a lot of value in that. There's much greater control over the direction of the project, an ability to maximize shareholder value. We think the next 12 to 36 months, there's a real opportunity to discover new resources and start to frame some economics around what we have. And that can be done at pretty manageable pro rata cash requirements. But one piece I think a lot of investors don't understand, even though this agreement we have, it doesn't have sort of a second phase to the option. It does have a dilution formula that's really a safety net or fallback for us. I mean, we fully expect the markets the gold market you've seen is going to spill over into the base metal space. And with the results we have, we'll be in a position to finance our share quite reasonably well. But should markets go the other way and we find ourselves in a challenging environment to finance, the dilution formula with this agreement would require, for example, if we were to reduce to a 25% interest, our partner would have to spend an additional $47 million US. That's more than enough to take the project to feasibility. Pedigree. We are at the north end of the Alaska Panhandle. It's mine country. There's the operating Constantine gold mine and Greens Creek mine in the neighborhood. The nearby community of Haines has 40, 50 people working at those mines. We're also geologically in the same belt as both Greens Creek and Windy Craggy. Windy Craggy is one of the world's biggest VMS deposits. Greens Creek is one of the world's highest grade. In our opinion, that makes a pretty good place to be looking for more VMS. Just a photo looking at the project area itself. A real takeaway here is the highway. Logging road access to the edge of the property connects to a highway that's 60 kilometers to deep sea port of Haines year-round. The dashed line there highlights the road we're currently permitting and trying to construct. We hope to construct this summer that'll give us access right into the guts of the property. Just looking the other way here, looking back up the valley, again, the dashed line highlighting the road and the resource area. A lot of terrain here, and this terrain we really like. One of the big advantages is it gives us three-dimensional geology. We can understand what the overall structural architecture and geologic picture is with relatively limited drilling. So it gives us a really good handle on a predictive exploration model. But it's also a big advantage for ultimately development. When your ore body's sitting above you, it's much lower cost to be able to access it by drifting laterally into the ore and mine your way up, which means lower upfront development costs and lower production costs. The other thing I wanted to highlight on the slide is the red stars. Those are some of the other prospect areas that we're looking to start drilling this season. They're very attractive prospects, but they occur on the same elevation. And one thing in terrain like this is, from an access point of view, you can drift laterally out to access these zones. And drifting out 1,500 meters is no different than ramping down 200 meters in terms of the actual development it takes to get out there. This is a cross-section looking at our south wall zone. And the real takeaways here: thick, continuous, high-grade zones of mineralization. This is what you want to see. These are attractive ore bodies, high-margin type mineralization, can be mined at low cost, and really nice steep geometry from a mine perspective. Additionally, the green hanging wall basalts, they're calcite-bearing with negligible sulfide, so environmentally benign, which is also an important factor. So next steps for us here, we've got a budget this year, $3.7 million budget. We'll be drilling and advancing our mineral resource, but it's really a two-pronged attack that we're doing. We've got the main mineral resource that we've been focused on the last few years. We're going to carry on with ongoing technical studies, environmental, geotechnical, engineering. And we're looking now at evaluating an exploration drift. And the purpose of that would be to continue with exploring the deeper parts of the deposit, but also upgrade that resource so you can start to frame some more meaningful economics. In tandem with that, we're going to be doing some property-wide drill testing, and these are targets we've wanted to get after for a while, so we're pretty excited about getting out there to test. Initial focus is going to be on targets that are within a 3-kilometer radius of our main resource. And additionally, we also have some 100% owned lands that we want to advance along so a full pipeline of prospects to be evaluating in the near term. So this here is a long section of our resource area. I guess for scale there, we've been able to extend the ore deposit down about 1,000 meters and defined it over a strike length of about 1,000 meters. Each one of those grids there is 100 meters by 100 meters for reference. As we're taking it deeper, the holes are getting deeper and a little bit more challenging to drill from surface. And because of the terrain here, what we are looking at right now, evaluating, is getting underground, where we can drift in parallel to our ore horizon, and it provides us a tremendous amount of access, over 1 kilometer of access to drill short holes and continue exploring and upgrading that resource. It's quite a unique situation we're in. And it's ultimately going to be lower cost to upgrade your resource than it would to drill from surface. Looking at the district scale potential, this is our property map. You might be able to make out the kind of hashed pattern. That's the area that we have under option joint venture with DOA. The surrounding land we own and control 100%. The red lines define corridors that we can track visually, because you can see the stuff, alteration zones and base metal occurrence. There's over 15 kilometers of strike potential where we've got good quality prospects to go test. So our focus, near-term focus, is going to be in a 3-kilometer radius around that resource, with the idea of anything we find would fit well, mesh well with any operation based on a south wall. Also, just point out our Circu prospect, 100% owned land. This is, identical looking mineralization to what we're seeing at our south wall area. And so our objective there is just to get it to the drill ready stage this year to hopefully drill for next year. It's a schematic cross-section, geologic cross-section here, looking at those other prospect areas. And we're real excited to be kind of getting after these now and talking about them a little bit more. We've known about them for a while, but the focus has been on that main resource. And what we like about this is this geology, it's controlled, stratigraphically controlled, and when it's folded around, anywhere we see that specific stratigraphy come to surface, we see alteration and mineralization, ore grade mineralization, and that gives you the confidence that you've got scale to host a sizable deposit within this area. And I'm just going to quickly run through a couple of these prospects. This is the HG. It's on the, the north limb of a big SIN form. Our RW and south wall resource area, it's a big antiform. This is kind of the opposite. It's a SIM form folded the other way, but very similar alteration, mineralization, and stratigraphy. It's about 600 meters of alteration and mineralization exposed at surface, never been drilled, with lots of down dip potential that you can keep chasing. It links up to the Cap prospect. This here is the Cap prospect. There has been some drilling here. 2007 was the last time it was drilled. It's wide open down dip, silver-rich, barite-rich system. Shown here are some of those mineralized intercepts. And we are seeing some base metal as well, up to 2 meters, close to 4% zinc, 2% lead. And what we see in our main resource area is we see silver-rich barite mineralization grading into base metal mineralization. So we've got a lot of confidence in our model that this will grade into something. We also really like the precious metal signature of this part of the prospect. And speaking of precious metals, I'd be remiss not to mention our gold assets. They've been in hibernation for the last few years because of the market. We've got some very strong gold assets located in Ontario and in the Yukon. Just a sample there, for example, from our Croesus mine. Spectacular high-grade mineralization, and we're currently evaluating ways to realize some more shareholder value for these gold assets. Thank you very much.